Hello fellow traders and welcome for another dose of Elliott wave analysis done by yours truly, Richard from Lionheart WA. Right, today's session will basically contain an update on gold, but also an update on some other assets, which we posted on our website on lionheart-ewa.com. So basically, what I'm going to do today is I'm gonna continue with the previous analysis on gold. So sit tight, enjoy the ride, and yeah, see you basically during our private sessions or see you on the website. Yeah. So in the previous analysis, I actually said that. Gold will bounce back most likely. I was expecting a bounce back at the 61.8 Fibonacci retracement from this whole from this entire corrective wave, which can turn out to be a one impulsive if this transcends, but we will see. There's no way of knowing that for sure right now. However, this complex structure is indeed telling us something. As stated before, I mapped this, sorry, corrective structure, complex corrective structure as an ABC, which will mean basically W. And then ABC towards X here, and then the Y, which obviously gave us the X after that. So what I did is basically here with this Fibonacci extension tool, from Y to X, I used the Fibonacci extension tool to determine how long the last leg will actually take. The last leg, which will basically mean a Z. Okay, so. In other words, I will actually state the following thing, that this Z can actually be a C. So in other words, this Y can actually mean that it's an A, okay, due to the fact that let's say this W can be it can be here an A and B and then C. So this can be an A after all. So this looks like a B, but um, there's really it's a very complex structure, so I'm just going to leave it for like this for now, but I will actually say that if this X is indeed a B, what I did was basically I used this Fibonacci extension tool to determine how long, how far basically this bearish cycle can go, bearish corrective can go. So I marked the point of interest, the buy zone right here at the 161.8 retracement from A towards B right here, but if this is a YXZ complex structure, then it's still basically pointing us in the same direction. So we from the previous analysis done from the previous video, I actually said at one time, at one point, it will retrace on the upside, and guess what? It did. So we are basically witnessing a bullish movement on gold. What I would expect is bouncing off this 78.6% Fibonacci retracement. As I said before, I was expecting a bounce off the 61.8. However, the sellers were indeed in control. So, in other words, we had a wedge. We had a wedge right here, but within this third leg. But very complex. I mean, this whole moves. According to this bearish move, I was expecting a retracement somewhere around here, and then the last leg, according to the previous analysis. We're going to go on that shortly, but one thing that I would state is that gold is on the rise. So yes, my analysis was actually stating that we will expect a rise, a corrective on the upside, and then another fall. However, we did not have that. We had basically just a mere correction. This fourth corrective leg was a bit low due to the fact that sellers were indeed in major control there. But we are at the 100. We were basically at the 161.8 retracement, and then we bounced on the upside. Now I will go through this whole thing with you guys, but Let's check out the previous analysis. By the way, our members have exclusive access towards basically all this analysis right here posted. What I'm gonna do is I'm also gonna make an update and go through some basically the most important ones, especially the intraday signals, the analysis, market analysis there. Let's focus on the gold when it was actually posted on December 6th. Let's make this full screen right here. Okay. All right. So this is basically the post that I did then, and if we click this play button, then we will actually see what happens. So as I said, I was expecting a retracement right here and then a bounce off, basically a comeback after that towards this levels. However, we have a short, basically very small retracement for the fourth wave, but we did indeed arrive at that point, and we are on the upside. Okay, so gold is on the rise. I will tell you my thoughts. I will explain to you exactly what I'm expecting. But for that, we'll basically make a quick update on the waves count first. So what I did is basically I modified, of course, this fourth leg. We had a extended first leg, then the second corrective. Very small. Sellers were indeed in control here. So yeah, this turned out to be like a major downfall. So the third leg, fourth corrective right here, very small, and then final fifth corrective completing B or 2 if this first leg transcended basically as a 1. But we will see. The only thing that I can say is that we have an impulsive wave on the upside right here. I'm gonna go on the charts back there to actually see if you can notice I'm already in the market right now. I'm selling the gold basically with a lower risk. I do have another position, basically a limit order on the upside, just in case this is indeed a fourth corrective leg, and then we will have the final basically move on the upside. So in other words, look out for these levels at the 160, sorry, at the 61.8 on the Fibs retracement from second leg basically towards third and then fourth. This indeed looks like extended third impulsive wave. Will actually tell you why, because if we count this as a 1 2 3, then 4 is not valid because it actually goes inside the wave 1's territory. So it's basically 1 and then 2 right here, and we have an extended wave 3, which would be 1 2 3 4 and then 5 on the upside here. Don't mind this, it's only basically the second within this fifth leg within the third leg. So after that we had the retracement right here on the fourth leg, and we're going basically on the upside, right? Temporarily. So be prepared. What I'm gonna wait basically for is I'm gonna monitor this trade, um, but I would like to see a divergence right here. Okay, so basically a new high point being created, but volumes continuing going down. As you can see, the volumes are actually going down right now, but we will actually see. Now, if this is what I did is I marked the Fibonacci extensive extension tools. I use this for basically measuring the third leg towards the fourth, right, and determining 61.8 on the fifth leg, just because the first leg was very small. So if the third wave was an extended wave, I would expect the fifth wave to be somewhat limited, so that it will actually go towards the 61.8 and not the 100%, because we already had the extended wave in the third leg. So by moving on. Basically, we have from the fourth leg by checking out the fifth leg. Okay, we have basically one right here, then two, and then three, four, and fifth. Just in case this is indeed an ABC, so we can actually have a very small wave, one, two, and then three, four, five. Then of course I decided to enter the market as of now. However, this is a risky trade. What I would suggest is that you keep an eye out from this. Just let's say call it whatever you want to call it, but this is basically a recommendation from my side. Keep an eye on this. Keep an eye on these levels, especially let's say very close to 1240 levels. On gold 1235, 12401, 1245. Keep an eye on this zone right here because this is a sell zone. Okay, we'll actually tell you why. If I zoom out, you'll actually see what we're going to do is we're going to approach the 61.8 on a fibs and extension, but check it out. Check what actually happened here. Okay, we had a contracting triangle and major support resistances, right? So we are basically right here at this previous support, which now obviously is an important resistance, and we have a support right here, which is now a resistance as well. So keep an eye out from these levels. I do believe it's time to consider selling gold. That's basically what I'm expecting. And in other words, this will finalize this after this wave, after this fifth wave will finish, right? Where this will turn out to be a first impulsive wave on the primary scale. So we're gonna have most likely a retracement towards this 61.8 as an ABC. So basically an A, then B, and then C right here, and then of course shooting on the upside and continuing this the impulsive structure. Now, if I go back, if I go back on the chart here, you actually see that I mapped it out as give me a second here. All right, mapped it out as an intermediate. Okay, within this, and then of course I'm expecting a corrective on the ABC for completing a second corrective wave, and then shooting on the upside and completing. So we still don't have that divergence that we're looking for. We do have a small one, but I'm not satisfied with this. I would prefer it for the bullish volumes to basically decrease and then selling off. But I am in the market. All right, I'm gonna monitor this trade, and obviously right here I will have my limit order filled in, and the stop loss basically will basically keep it in 1262 levels, somewhere around that. I'm gonna monitor it, but be sure that our reviews are always updated and posts are being done and updates. And all right, now that's enough for gold for now. We'll give you another insight basically on the longer scale on the US dollar index and my thoughts on the upcoming recession. As you may know, Elliott wave determines, obviously you can actually use this tool to determine future cycles. So in other words, there is a cycle indeed for recessions as well. Every 8 to 10 years you will basically there's another recession happening. So considering the fact that last recession happened in 2008, and we're pretty close. And just wanted to give you my insight here on basically when that will actually happen. Now I marked this as an ABC on the longer scale, on the daily chart, on dollar index, by the way, so that you can actually see this. This post was done a few days ago. Yeah, January the 14th, 4 days ago. So the reason why I marked this as an ABC, I saw basically other traders. I noticed that other traders are marking this as a impulsive 1, 2, 3, 4, 5. However, I'm not really satisfied with. I would not be counting this as a 1, 2, 3, 4, 5 due to the fact that um, this this whole thing, this corrective, let's say, two, if you would count it as a impulsive 1, 2, 3, 4, 5, this looks very much as a B for me. One thing is for sure. We let's say, for example, if we would have had like one here, then two, and then extended 1, 2, 3, 4, 5, then we would expect if let's say an extension in the fifth wave or in the third wave. Okay, so we have basically let's say if we have an extension in the third wave, sorry, if we have an extension in the third wave, um, this downfall is not looking like a fourth wave for me, considering the fact that it doesn't have enough room for it to basically be considered as a fourth leg. So that's why this very much looks to me, from experience, I'm going to tell you that looks like a B. So I marked this whole thing as an A, B, C, and then A, B, C right here. Okay, and basically what I'm doing from now is I'm counting the remaining C as an impulse. Okay, so as I was saying, I'm counting this as an impulse 1, 2, 3, 4, 5 towards the C, right? Towards the primary C as a corrective. However, there is a gentleman who gained my attention, and I want to thank him with this by this method, by the way. One thing is, if this is a 1 and then this is a 2, then the rule obviously says that second wave must not go beyond the start of wave 1. So this could be in fact an A, then a B, and then this third impulsive can be a C. So this leaving us with WXY being in fact a B. So we are still going on the upside. However, the C wave will this will mean that the C wave will be somewhat more powerful. However, even if that happens, we're still on the wave count. My wave count right here still remains the same. So basically, what is actually expected, let's say, from the time that I made the post. Let's say if we load the new bars right here from time there, I actually said that it's going to basically, this is a very important level. This is a sentimental level, the 100 level on the dollar index, and obviously after that we should have a rise and then another fall, completing the fourth leg. It can go all the way, let's say, lower towards 98 levels, but I will actually say that 100 levels will be having a very big importance. I mean, they will be very important. So they should hold, in other words. After that, obviously we're on the daily chart right here. So after that will happen, then we're expecting the fifth and last impulsive wave bullish move on the dollar index, and I did mark it as let's say 104 levels. However, it can actually go towards by measuring with the Fibonacci extension tool. Let's say it's with this two swings, okay, 114 levels would be the final target. So we shall see. We shall see what will happen. But one thing that I can say is that after this C wave will be completed, then there's the next recession happening, like an ABC. So it will be very big. Something big is coming, and we're basically just gonna wait for the upcoming, for the time will tell. Time will tell what will happen. But one thing that I would like to say is that for the first quarter of 2017, I'm expecting a bullish US dollar, and then for the second quarter, somewhat, let's say, a bit bearish, but overall on the longer scale, US dollar should finish 2017 on a bullish side, but starting with 2018, something is happening right now. Of course, I cannot say what will happen, but something will, something big. If we're talking about a market crash or a recession or I don't know, some geopolitical event, God forbid, but we never know. We shall see. Time, as I said, time will actually tell. Okay, moving on towards the crude oil. I do have a sell setup here, which I posted about a week ago, 2 weeks ago almost, for this uh, for this trade. Okay, this was posted on the 9th. So if I load the new bars here, you'll actually see what went on. Just to obviously this went in the money here, but one thing that I'm not satisfied with is I'm gonna keep an eye on this just for you guys to let to be updated here. So we have first impulsive, second corrective, and then this another fall, another move on the downside. But this doesn't look like this is too big to be corrective, especially if it runs inside the number one's first leg's territory. So this could be either an extended third leg or an ABC corrective, a B corrective within this C. So this one can be A, then this two can be B, and then C. So we have an A right here, and then A, B, C, which is completing B, and then C on the downside. All right, completing basically four. But we will actually see completing A. I'm sorry for that. So these levels will still hold. All right. So keep an eye on 49 levels. Those are basically the our targets. But we will see basically what will go on. But I'm waiting for a bearish outcome for crude oil. I'm already in this trade. If I go to my actually trading charts right here, you can see that I'm in the market. With that, one thing that I will do though is due to the fact that I am indeed in the profit, I'm just gonna set my stop loss in the profit. So either if this turns out to be to go on the upside due to the fact that let's say um, if this B wave can indeed let's say act like an A right here, and then be corrective, and then a rise all the way up here before it really falls, then I just want to cover myself. So in other words, either I break even, or I go very big right here. So my risk is indeed going to be very, very limited for this trade. There's another trade that I actually posted on December 21st for Euro British pound. And according to this head and shoulders, a beautiful head and shoulders formation right here, we actually have said that it will rise before it will fall, completing basically the fourth corrective leg. And if we load the new bars from December 21st towards, okay, right now you can actually see that yes, this was indeed the right shoulder. So in other words, what we are expecting right now is the last leg on the downside, completing basically the fifth leg within this A corrective for this whole bearish cycle. Okay, so if I zoom out, you guys will actually see what I'm talking about. Just give me a sec here. Okay, there we go. All right, so we have 1, 2, 3, 4, and then fifth leg right here on the upside, and the cycle is completed. So basically we're going on the downside, 5 impulsive wave on the downside, then of course three corrective legs are expected on the upside. And this indeed correlates with British pound's movement, either fundamentals and technicals as well. But British pound is indeed expected to rise before it falls. So does the euro. So there's another weakness coming up for the US dollar before it goes really strong for the let's say second half of 2017. But be sure that the US sorry be sure that the US dollar will be bullish this year. So yeah, once with the US dollar gaining strength, then obviously Eurgbp will indeed gain strength. I marked out some levels right here for you guys to take a look at. 0.87500 is indeed very important as it is the right shoulder, and we can actually enjoy this bearish swing on the downside as of now, because we do have a divergence on the Euro GBP as well. Let me just go there and actually show it to you guys. Okay, so we have this is what I'm talking about, this bearish divergence right here. Price action create a new high point while the volumes are basically decreasing. So in other words, bulls are running out of steam here. Okay, bulls are running out of steam. This is an ABC type of structure. So we have A, B, C completing an A wave on the larger scale, and then the B, and then of course C wave, A, B, C completing at. Notice that I actually measured this wave, the Fibonacci mathematical measurements on the Fibs extension from A towards B, and then determining 100% target for the C, and then there we had that divergence. So we're going down on Euro British pound for now. We'll actually go on the Euro USD here. I did make a post on on December 8th on the Euro USD, saying that you know, when Mario Draghi had had a press conference, and I was expecting him to rock the boat a little bit on, but that did not happen then. However, this is not. I'm gonna make an update basically on this wave count. Previously, I marked this as a WXY being formed as out of free moves A, B, C. However, I am expecting another rise, but this wave count is too ambitious, if I may say, because the E, let's say from this whole A, B, C, D, E, is too big. We'll most likely gonna have this type of scenario following the trend line right here, and basically being going on the upside, but on a smaller scale. So the price target basically that I'm expecting before Euro USD will really fall and completing the last primary bearish wave when the US dollar will gain strength would be around 110 levels. So keep an eye on that. Keep an eye on that in the near future. But what I can say by analyzing this, let's say marked Y and the D here, we can also say that this in fact this Y is not completed yet. But we'll actually make sense of that. I'm gonna tell you guys what I have in mind. So this basically having a 1 and then 2 corrective. However, having triangles in the second wave is not something not something that to look at. It rarely happens, but we can keep that in mind as an alternate count. So let's say if we have 1 then 2 and extension in 2, in 3, as a 1, 2, 3, 4, 5. This will in fact mean that it's a third intermediate within this primary structure bearish wave. So meaning that we're gonna go with free moves on the upside, 4 other free moves on the upside, WXY, complex structure A, B, C, and then going a little bit more down, and then finalizing another free moves on the upside A, B, C, completing basically the corrective for the fourth wave or for E. Either way, this is basically point. Both counts are pointing me in the same direction. So those are my thoughts on the euro dollar. Would expect this price action, this price level, sorry, to be hit at one point. So yeah, when the US dollar will gain its strength and continue with the bullish trend and completing that towards completing that cycle. This is the levels. These are the levels. So I know that is scary, but we're in the market, so anything can happen. It is expected. For those of you who are trading indices, I did post recently, a few days ago. I did make a post on the SPX and S&P 500. Just to keep it very simple. Okay. This this is basically telling me the following thing. After if we had the first primary, then second corrective, third primary impulsive wave, then of course we will expect a corrective on the downside. Now I marked this as an A, B, C. However, we could have W, X, Y, but we will see. The thing that I would like to tell you is that this B wave went beyond the previous high points. So making this a irregular correction as a type of corrective structure, meaning that the C wave can be much more powerful and it can really go beyond the start, basically the ending point of A, starting point of B, which means that it will be most likely going to be formed out of five-wave structure. On the downside, 1, 2, 3, 4, and then 5. If I load the new bars, we will actually see that it's basically slowly going to go there. Obviously we're on the 4-hour chart, so this could take some time. However, this can be a trade for you guys to take a look at. My risk on this trade is basically very limited, 0.36% risk towards the potential 2.68% profit. This is basically all that I wanted to actually tell you guys about the market. However, there are other posts, other posts coming for gold. Gold, however, stay in the loop. Stay in the loop with us. Just wanted to tell you that Lionheart WA is indeed officially live. So our members do have exclusive access towards the analysis, but also towards the other services. So regardless if you're looking like for a free trial, for example, or even having private sessions on trading or private trading on education or access to information, or being maybe you want to receive some market analysis or some intraday insights, etc. All you have to do is register a free account and you have access to the info, or even have a membership. Be sure that you go through the services first and see what they're all about, what we're all about, of course. Test us out. By all means, Lionheart EWA is going to be there for you. It is in fact for and with the traders. So we are going to provide you with the we're going to help you with the information that you're truly looking for. Yeah, we do have promotions as well. There are discounts, even 50% or even more discounts on every packages, especially for the quarterly packages, but also, so let's say, for the monthly subscriptions. Depends what you're looking for. Depends on what services you're looking for as well. But regardless of what you're looking for, be sure that you're going to have it with us. So this is an official invitation. Just go on our website, lionheart-cwa.com. Check us out, check the website, check the content, go through the services, register a free account if you wish. If you also wish to subscribe for the free intraday signals, of course, by all means, we're here for you. So yeah, once again, it was a pleasure. This was Richard with Lionheart WA. Stay in the green and many pips ahead. Bye for now.